Everybody is looking at 2025 with a bit of a mixed outlook.
If you look at last 20-25 years, Indian equities, even adjusted for rupee depreciation, have actually outperformed global and US equities.
GDP is somewhat not where we want it to be.
Asia is clearly the global growth engine right now. India should become the third largest economy by 2029.
What would you say are your top few picks? Hello and a very warm welcome to Navigate with HSBC, where we talk about wealth management, financial outlooks, and investment insights. Whether you're looking for investment opportunities, market updates, or actionable strategies, we've got you covered. Let's dive into today's episode. I'm delighted to have Abhilash Narayan with us, investment strategist with HSBC. And together, we will explore India's financial growth story and what the future holds. First of all, thank you so much for giving me your time.
Pleasure to be here.
I think everybody is looking at 2025 with a bit of a mixed outlook, primarily because, we have these lofty targets about 30 and 10 trillion dollar economy. Having said that, the GDP is somewhat not where we want it to be. The numbers are a tad mixed. What do we make of it?
Thank you, Mugdha. Actually, it's very interesting, right? So ever since we had the GDP mess in the previous quarter, there's been a lot of focus around the negative aspects of growth, right? The slowdown in urban consumption, etc. But it's just one data point. And, when we zoom out from that one data point and look at the broader picture, we think that the outlook for Indian economy is still fairly positive. So we expect Indian economy to grow at around 6.5% in 2025, which is actually much, much higher than the growth we expect for global economy at 2.7%. And if our projection of, India's growth continues, then, India should become the third largest economy by 2029. Now, if we focus on some of the near-term factors, yes, urban consumption has slowed down, but we are also seeing signs of pickup in rural consumption, especially after the healthy monsoon season. We also expect the government capex to pick up. And when you look at the, high frequency data, PMIs, industrial production, they're all pointing towards the fact that Indian economy is growing at a healthy pace. So yes, we've come down from the 8% growth level that we've been used to for the past 4 years. India is still growing at a healthy pace at around 6.5%, and it is the fastest growing major economy in the world.
You are at a great place. You are looking at the Asian economy from Singapore, India, and the continent, basically. And we are looking at so much in terms of opportunities, in terms of consumption, in terms of adoption of new tech. We are also looking at some of the sectors that are academically also looking very, very robust. What would you say are your top few picks?
Well, you're right. Asia is certainly the hotbed of activity, and Asia is clearly the global growth engine right now. But at least in the near term, there is this prospect of US tariffs, and that has, softened the sentiment around Asia. And we cannot talk about tariffs without talking about China. So, we think that Chinese policymakers will try to counteract any tariffs with fiscal stimulus, more government spending. But clearly, there are downside risks if tariffs materialize. However, if you look at other economies in Asia, such as India, Indonesia, they are expected to grow at a healthy pace because they are more domestically oriented economies. And they should be relatively more immune if any tariffs were imposed. So, within Asia, we think that India and Indonesia are two sort of exciting economies to look at.
No, wonderful. I'm shifting focus towards FIIs and SIPs. Now, SIPs have to be one of the most interesting financial habits that people have adopted and embraced in India. Everybody is clued into SIPs. The number of people that are investing is going up. Having said that, FII movements remain very, very crucial. What is the outlook there, and what do you foresee?
You're absolutely right. So we've seen about $19 billion worth of outflows from FIIs over the past 4 months or so. And the outflows have been driven by a combination of factors, right? Obviously, there is an element of profit taking. Indian equities had a great run for the last 3-4 years, so why not take some profits there? And there've also been concerns around, growth, INR weakness that have driven the outflows. But from my perspective, I think the sell-off we've seen is starting to look a bit overdone. So if you just look at, the concept of INR weakness being a detriment for Indian equities. I think the concerns are not justified by data. If you look at last 20, 25 years, Indian equities, even adjusted for rupee depreciation, have actually outperformed global and US equities. And that's because the earnings growth for the companies has been extremely strong, right? So we think that's something important to consider. Now, when we talk about the domestic flows, obviously they are continuing at pace. I think in SIPs itself, domestic investors are allocating almost $3 billion US dollars worth of money every month. When we think about SIPs, we think that the story has room to run, because when we compare Indian households versus households in US and Europe, they're still underexposed to equity markets compared to other counterparts. So we think that this story can continue for the next few years, and obviously it offers a very, very strong backstop to Indian equities.
Wonderful, Abhilash. Thank you so much for this wonderful interaction. It was very, very insightful, and I hope to continue these conversations in time to come.
My pleasure. Thank you.
All right, that's it for today's episode of Navigate with HSBC. We hope you gained valuable insights into making informed financial decisions. Stay tuned for more expert perspectives on wealth management and investment trends. Until then, invest wisely.